This is the briefing for the weekend of May 7th. Tonight, or today, I should say, I want to start the briefing with a little bit longer term analysis and talk about timeframes, because I think timeframes are becoming more and more important in today's market. This is a weekly chart, as you can see, of the spiders, the SPY. And it's important no matter what time frame you trade, even if you're a short-term trader or a day trader trading off a 1 or a 5-minute chart, you certainly want to know what's happening in the greater degree time frame, mainly because you don't want to be taking a position on one side of a stock or a market or a future and finding out that you entered that trade just as it was completing a counter trend rotation in a greater degree time frame, and the main trend in that greater degree time frame is getting ready to re-exert itself. So that's why it's always important to understand what happens in terms of the greater degree time frame. Now, I'm going to start with a longer time frame today and bring this down into a shorter term time frame so we can see exactly where we are. Now, understanding that this is a weekly time frame, so we understand that prices run and pause in all degrees of time, and you can see a run, a pause, a run, a pause, a run, a pause, and then in shorter degree time frames, these pauses become the main trend in a shorter degree time frame. So this was a downtrend in a daily time frame or potentially an hourly time frame. So what's important here now is to determine if this is a counter trend rotation, which appears that this is about equal to this, then we could be at a point where this move to the downside is complete. The other side of that analysis is the fact that if it is not complete, then what's happening is it is transitioning into a greater degree time frame counter trend rotation. And looking at a monthly chart, you can see that here's a run, a pause, a run, a pause, a run, and a pause, and this may not yet be complete. So we may have more downside work to do before we see some type of equality within the market or within the spiders itself. Going back to a weekly chart, now those of you who have been listening to these briefings for quite some time understand, and I've got a new book coming out that deals with how to analyze counter trend rotations, and that they have certain characteristics, and while they're not all the same characteristic, you can usually understand a majority of the characteristics to determine if it's counter trend, and can come up with a fairly high probability assessment of when that counter trend rotation will end. So what I did here was, one of the characteristics is a lot of times they happen in a three-step move where you have a leg 1, a leg 2, and a leg 3. And a lot of times leg 1 will be equal to leg 3. So basically what I did was I did equality here, and it projects down to about the 390, 395 area before the spiders would be complete or would complete what could be a counter trend rotation. Now that is one potential analysis and one potential strategy. So looking forward, if we were to continue this move to the downside, in my trading, I would be aware of what happens when we get to around that 385 to 395 area in the spiders, and be looking for clues from the market to determine whether this potential counter trend move on a weekly basis is coming to completion. On the other hand, if the market is transitioning into a much greater degree time and price counter trend rotation, then it will likely blow through that 385 to 395 area, and we'll likely see much significantly lower prices, potentially coming down to the 340 area. And you can see that right through here would be the next level of longer term support. It's always important to keep in mind that the most recent information is the most relevant. So as we go longer back to determine where support and resistance is, it's not as relevant as something that would be nearer in terms of time frame. Now, looking at where we are in terms of the daily chart, This is the daily chart that I've been using for quite some time, and you can see the rotational pattern that the spiders have been in for quite some time. And it is important. Now, looking at this, we've looked at a monthly chart, a weekly chart, and a daily chart, and the daily chart is basically in rotation. But transitioning outside of this support area at 415 would then suggest that we are transitioning from a daily into that weekly rotation lower, looking at that 385 to 395 area potentially as support. Breaking that then would suggest we are breaking out in a monthly time frame and looking at significantly lower prices. But I don't want to get too far ahead of myself, because now what we're dealing with is we're at a significant support area, meaning the 415 area, and I'll get to the other indices in a few minutes. But as we get to this area, it is always, not always, but it is significantly a higher probability of time that most traders, most big money, know where important resistance and support areas lie. Based on that, traders understand that. So when price comes into that area, a lot of times you'll see a pause as traders step back to try to determine whether there's enough internal strength within the move to drive price through that resistance or support area and drive price continuing in the direction of the trend, or whether there's going to be another significant rotation back to the upside. Now, just as an example, you can see this pause right here in the spiders lasted about 4 or 5 days. And then, of course, they were unable to take it higher. So we had this rotation back to the downside. We have a shorter term support area right here. And you can see the pause that occurred right through here, unable to take it higher. This was a false breakout. And then, of course, we had this rotation lower. And now we've got even a greater degree time frame rotation right around this 415 area, and then a shorter time frame rotation right through here, which suggests then that a potential breakout below what I would say was Tuesday's low. You can see this buying tail that came in on Tuesday. That would then suggest that if we trade much below Thursday's low, that this buying tail is not going to be defended, and we're potentially going to see a breakout below the low from this day and this day. Significant to this also is the fact that volume is increasing pretty significantly on the down days. Now, this was a pretty significant day on Tuesday, and it was really in front of the Fed announcement. So it's going to be important to see if this is going to be defended by traders. Bread is declining. This is 52-week highs minus 52-week lows. That is declining. So basically, the internals of this market are suggesting that it is strengthening to the downside, not strengthening to the upside, but it is weakening and becoming weaker with each trading day. Now, 415 is important resistance now in the spiders. Trading above that would then suggest the potential to test this 430 area, which is the high of this day and this day. So this is a pretty significant time that we're in terms of the stock indices. I've said previously, going all the way back to February 24th and January 24th, when we had those lows, that we should see some type of significant move to the downside or capitulation to the downside. We've not seen that. And on February 24th, I did a briefing and I said that we needed to see capitulation, and the February 24th low was not capitulation. And capitulation is basically where sellers just puke all their shares out and there's nothing left to sell, and then buyers step in. We see a formation forming at the bottom, and then we see some type of rotation back to the upside. So that has not occurred yet. If that occurs, it could signal a significant bottom. But as of this time, it has not occurred. So basically, moving forward, what we can see here is we can see the possibility that we're going to have either rotation back up or we're going to extend vertically down. And if we extend vertically down, then that should be a pretty significant move to the downside. Now, I said earlier this was a daily chart. It's actually a 120-minute chart as I'm just looking at it here. So what was significant here also was this was Wednesday's trading, which was the Fed announcement. And you can see it appeared that we were going to see a significant move back to the upside and potential test of 440. But the next day, selling came in, and selling came in pretty significantly, and then continued through Thursday and then into Friday's trading. So basically, this was a pretty significant day, that this whole range, everybody that bought this day and thought we were moving higher, basically got run over the very next day. So this certainly gives us a lot of reason to be cautious on long positions, at least at this point in time. Now, breaking the lows from this day, I guess this is like May 22nd. Now that's May 2nd. Breaking the low on that day and breaking the low from Friday. I think that's Friday's trading. That would be the 6th. Yes, Friday's trading. That Friday's low. You can see those two lows are pretty significant. Breaking those really would suggest then that we are extending down vertically. Now, that happens to be the spiders. As we look at the other indices, they're a little bit different in their price development. The NASDAQ or the Qs, as you can see, are not really giving us a great degree of pause at this lower extreme right around 320, and have already extended below it and closed below it, which is pretty significant. So you can see this little area of pause, these several days here where we got this pause right at 320. This is the low of February 24th, and it was retested, and then of course we bounced off of it right back up to about this 370, 375 area, and then of course turning back lower at the 350 level. Another pause at 350, and then of course moving down, another pause, and then of course this appears that the NASDAQ is telling us that it wants to go lower. Also, you can see this is volume in the Qs. You can see it is increasing as the price moves lower. And of course, volume is increasing on this whole move to the downside. NASDAQ breadth just absolutely collapsing. Thursday's breadth readings were about as negative as I've seen, both in the NYSE and in the NASDAQ. Looking at the Russell is also breaking out to the downside. You can see this area of rotation here, smaller area, shorter area of rotation, and then of course the breakdown looking towards potential follow through the first part of the week. We were at a point of being extremely oversold on Wednesday. We worked off some of that on Friday. On Thursday we were oversold, extremely oversold. Worked off some of that on Friday. And I've seen this before on this indicator that I use for overbought and oversold indications. When you see these little kinks like this, where you see a move off of overbought or oversold, and then a little move to the downside again, a lot of times it's not 100%, but a lot of times what happens is you'll see another thrust back down. I wish I could go back and find a place where that happened. Well, it happened right here. You can see this here was a little kink here, and then we had the additional thrust to the downside. So I'm kind of watching for that on Monday. Personally, I had a very good week trading myself to the short side. I was not long on Wednesday. I did not buy into that. I was not short either coming into Thursday, but I certainly got short on Thursday. And then we had some follow through on Friday, and I'm basically flat going into Monday. I was a little surprised at Friday's trading. And the reason I was because I really thought that we were going to see more follow through to the downside than we saw. And you can see we had a little bit of a rotation back up. We had a lower low, a little bit of rotation back up, and then this pause that basically happened. Same thing in the Qs, a lower low, but then we had the rotation up and a pause. Same thing in the Russell showing a little more weakness than the other indices. Now, one more thing I want to talk about is the Dow Industrials and the Dow Transports. So basically, this is the industrials, and you can see the industrials in this area of rotation now testing lower extreme. This is the February 24th low, testing this lower extreme. Same thing with the transports in this smaller area of rotation, but there's a divergence between the transports and the industrials. And you can see that. You can see the industrials testing support, transports not really at support yet. So it's going to be interesting to see how this is resolved. Intermarket divergences, it's impossible to tell how they're going to be resolved, but they're typically resolved in one way or the other. But we just know that at some point in time, they will get resolved. So it's going to be a question here as to whether the transports are signaling strength or the industrials are signaling weakness, and one will catch up with the other. But I just want to point that out. Now, for Monday's trading, it's going to be important to watch what happens. Certainly, if this low is taken out in this counter trend move here, if this is taken out in the spiders, Friday's low will get taken out, and that would suggest then that we're extending down vertically. This could be a counter trend rotation, three-step counter trend rotation, which would project it to end somewhere up in this area here. Same thing with the Qs. Potentially not with the Russell, and this gives me more of an indication that I'm going to be watching this 306 area in the Qs, and this low is at the 407 area in the spiders, because if that's broken, then that's going to be a pretty good signal that the higher probability will be for this low to get taken out, and then we just don't know where the next stopping point would be. Now, if you do take that strategy, then if we do break this low, you'll probably see a pause right at this low. But if we go trade back through that low, you don't want to be in that trade, because that's going to suggest then that we're going to see higher prices. If we get the three-step counter trend move and we get a higher high on Monday above Friday's high, then what happens up in this area is going to be extremely important also. So have a great weekend. It's going to be a very interesting week next week. I would just be cautious to the upside of this market. I'm not seeing any internal strength suggesting that the counter trend moves to the upside are strengthening. In fact, it's usually the opposite. The counter trend rotations are weak to the upside and strengthening to the downside. Until that changes, just use caution. Have a great weekend.